We like to bring our listeners accurate information instead of headlines and sound bites designed to simply attract attention. And ladies, I think today, more so than ever, it's important to talk about the real information, not just sound bites and headlines. Yeah, I usually go into this whole description about how we want to help people make their best decisions possible for themselves and their families. I'm Rebecca Rains with Integrity All Stars over at Berkshire Hathaway Home Services, and we are proud to be part of the Timely Balanced Truths Network. I have Amanda Briggs and Tara Krieg in front of me. Amanda is the VP of Education and Technology with lawyer's title and also the CEO of Roosted, and we'll have her talk about that. And Tara Bianco Krieg is our Senior Loan Officer, Branch Manager, Financial Coach, CE Instructor. Both of these ladies know what's going on. And right now, everybody wants to know what's going on because there's some really crazy times that we're all seeing. I mean, just driving here today, by the way, P.S., we are practicing social distancing the best that we can here in the studio. I do have Purell on the table for those of you guys watching us live on our Facebook feed. And besides that, we are trying to stay as far apart away from each other. The girls both have promised me no sneezing, no coughing, and no touching their faces with their hands. So if you guys want to watch us to make sure we abide by all the rules, you can watch us on Facebook Live at gratefulheart.tv. And ladies, you know, I don't even know where to start because there's so much to talk about. We know we're going to run out of time. We have 4 segments, and we're going to be over before we know it. So, Amanda, what in your first intro on the show today, what do you want to cover in today's episode?
So I think the main thing to know is what is really happening in real estate with all of this going on. Obviously, things change day to day. We really didn't see any impact whatsoever here on the local Arizona market until right after St. Patrick's Day. And I think kind of knowing where we've been in the market and the way in which this has impacted it is really important for people to know because it hasn't been as drastic of an impact as I think people might think it is.
Agreed. And I know both of us pulled stats from the Cromford Report. I was on the MLS this morning pulling current actives and pending sales. And I'm happy to talk about even this past weekend my sales that I have had. Tara, you and I talked a little bit briefly this morning. What about you? What do you want to cover in today's show so the listeners know what they can expect?
Oh, absolutely. I want to talk about the stimulus that was passed and families who are affected by job loss or loss of income, what their options are with that, and really just what's happening on our side of the fence in terms of home financing and how things are changing.
And in her world, we're talking mortgages, guys. And mortgages are changing daily.
Every single day.
Well, yes. and I almost feel like every single second because you even sent me some headlines this morning via text, Tara, that if you just read the headlines, you'd be a little more freaked out than probably you should be as long as you're educated about what's really going on. And that's what our goal today is, to educate everybody who's actually listening about the real deal, what's happening in real estate and business as far as in Arizona specifically, right, ladies?
Absolutely. Yes. And it's funny you say that, Rebecca. I have my computer up and I'm reading as we go because that's how swiftly things are changing.
Well, I'm glad you have your computer up. I was a nice little geeky nerd this morning, and I know, without even saying it, Amanda really much is the biggest, geekiest nerd I know, but that's a sexy thing, ladies. I like nerds because we know what's happening. We know our stats. I did hop, I don't want to pretend I'm the authority on anything COVID or coronavirus. I did hop on the Johns Hopkins website this morning with the interactive map. If you haven't been on there, I think it's pretty fascinating. It's amazing how much has just changed in the last 2 days. I was on there Saturday morning looking at the stats in preparation for this morning's show, and the stats have changed some. Now, I just want to kind of go over just to kind of put things into perspective. Here in Arizona, we have 7.1 million people as of 2018. In Maricopa, we have 4.3 million people. So obviously over half of the state lives in Maricopa County. In Maricopa County, we currently have, according to the website, again, we talked before we went on air, we don't know, how many people out there think they might have gotten it already and they just weren't tested. Like, we don't know how reliable these stats truly are on the website. We'd like to think that they are. They show in Maricopa County, as of this morning, 545 people have tested positive. Unfortunately, 5 people have passed away from this in the last month or so, which is a really sad thing. In the entire state, we have 919 that have tested positive, with a total of 11 who have passed away. In the U.S., on Saturday when I looked, we had 124 positive cases. As of this morning, we have 143,000 positive cases. and that's out of 327 million people in the U.S.
Right.
When you look at the grand scheme of things, we are 7.5 billion worldwide population, 741 reported cases positive, with 35,000 deaths. But the good news there is 156,000 people have been reported as recovered.
Right.
We have not seen any recovered cases here in Arizona yet. So it feels like we're kind of behind the game of a lot of other places in the world.
Sure.
And hopefully we get to learn a little bit about what they've experienced, whatever we experience here locally. And all of that said, I was out showing homes this weekend. I have been writing contracts. I have gotten contracts on my listings. Real estate is still happening here in Arizona.
It is still happening, Rebecca. As a matter of fact, we have received 12 purchase contracts in the last week and a half, and we fully expected that that would slow down. But for many buyers who were discouraged because of multiple offers, they see this as an opportunity, if their employment is secure, to get out there and be able to purchase a home at a time where there's perhaps not as much competition.
Absolutely. One of the changes that we've seen since March 18th is an increase in new listings. Now, we've been down on the number of listings, the number of active homes that are for sale. That's average for our market.
Right.
We've been below average for 4, 5, 6 years. So this new increase in listings, which is the biggest chunk of it, is actually in that under $400,000 price range, which is that price point where we really needed some new inventory. And so one of the biggest changes that's come out of this is that increase in listings. Some people hypothesize that it's vacation rentals and Airbnbs, where they're seeing a lot of cancellations, people not traveling, and so they're like, okay, we're just going to go ahead and list this investment property for sale. And so that's a lot of that price range that we've been needing in the market.
Well, and I'll tell you, you just gave me chills. My mom's place was rented for the whole entire month of April. Of course, they canceled.
Mm-hmm.
She's not planning on selling, but to your point, we have seen a lot of cancellations on anything travel related, obviously.
Mm-hmm.
And the vacation rentals certainly are a nice little injection into the market shortage we've had. Just 2 weeks ago, because I'm such a nerd, I pull these every time I do the show. 2 weeks ago, I wanted to see how many active listings were in Maricopa County, and we had 8,500. Today, we have 10,500. So to your point, Amanda Sue, we have gotten 2,000 more active listings currently showing. But that doesn't mean we've had less sales.
Right.
The reality of it is we have currently pending under contracts homes is 9,100. And guess what? Last time I did this, it was only 7,800. So we actually have had more sales in the last couple weeks because of the influx of inventory. And all of that said, in the last week alone, over 2,000 homes have gone under contract in Maricopa County.
Wow.
Over 2,000. And that's the stats that I pulled this morning. So to your point, I know I had a lot of buyers who were getting really frustrated in February. I've been doing real estate for 27 years. I have never seen the bidding wars we had seen in February. So those people actually are going out today, and one of them got a contract with me this weekend where, yes, it was 1 day on the market. Yes, they paid full price. But last time we had a 1 day on the market full price house, we were there within 2 hours and somebody else beat us and gave a cash offer, and we didn't even have a prayer. So, definitely, as you said, opportunities. That said, in case you just joined us, you are listening to Grateful Heart Radio, Motivational Arizona Real Estate and Business Show. And today, our 3 E's are more important than ever: to educate, empower, and engage you guys. You are sitting here listening to Tara Krieg with AmeriFirst and Amanda Sue Briggs over there at Lawyers Title and Roosted. And we are going to come back to you guys after break. We have to pay, the bills, run a few commercials. And we're going to continue this discussion, folks. If you guys want to join us live on Facebook Live, you get to watch in the commercials what we talk about, too.
We have 7 people watching right now.
Awesome. So in other words, we have to be careful what we say.
Okay, so I meant to tell you this last time and I totally forgot. So it's Krieg.
Oh, I always say your name
No,
wrong.
and it's so funny. Somebody brought it to my attention. They're like, she keeps saying Krieg. And I'm like, I know, I just need to remind her.
You need to remind me it's Krieg. Well,
Krieg.
I see the way you spell it. I just assume it's Krieg.
So German.
So
That's
sorry.
my cousin has the same last name as
Krieg.
you.
Yes,
Krieg.
Krieg.
I need to
It's
say that
German.
over and over again. Krieg.
Krieg.
Okay. So do you still want me to use Bianco?
No.
Because you have it on your sheet, just so you know.
So technically, my business was Bianco Home Loans for a very long time. And so when I transitioned,
Okay.
I kept Bianco for several years. And now I think for the most part, people have grown accustomed to the TK team and Tara Krieg and
Okay,
kind of
so
have
I
adapted to
crossed
that
out
change.
Bianco, just so you know, so I'll never say that again. And Krieg. Amanda Sue, do you have any recommendations on your name?
You're
Do I
all
need to be
good on
careful?
mine.
Okay, I just want to make sure.
Zip for this.
Zip 85249. Getting lunch orders in, guys. It's really important. So, ladies, next segment. I know you have the relief stimulus you want to talk about. Anything you want to add on to her discussion with that?
I guess not necessarily with the relief stimulus, just that, you know, it's different price points. We've seen an increase in cancellations, but it's mostly been in the higher end price point. The lower end price point still doing okay, just longer closings.
You know what I'm kind of disappointed with, though? I had a buyer 2 weeks ago, no joke. We got in a bidding war at $750 in Queen Creek, of all places.
Wow.
And the price was driven up 15 grand, and they were mad at that point because we kind of got jerked around all weekend. Again, this is still happening even with everything that's going on, right?
Right.
And I haven't seen anything new come out to market that fits that same bill for him.
Mm-hmm.
So I was kind of curious because I have heard that it was the higher end stuff that's canceling,
Yeah.
but I'm not seeing it in all areas, and I'm not seeing the new listings to replace that.
Right.
And do you think that's truly just because of the VRBOs, or what do you think that is?
I mean, I think that to see an influx of that price point so quickly, it's got to be investment properties. I mean, people
Well,
in that
and
price point are moving that quickly and making that decision that
We
quickly.
didn't speak to the fact that iBuyers have pulled out. So
Yeah.
when you take
That's
the
another
Zillows
piece of it.
and you
That's a
take
good
the
point.
Oh my
Offerpad
That's a good
out,
point.
It explains why we're seeing an increase in listings.
That's a very
and
good
I
point,
even
yeah.
heard that they were not even.
OfferPad. We don't know if all of them have, but
Yes.
OfferPad has.
We have to talk
So
about
the
that next.
combination- You know what's funny? I was just about when you had.
That's what we're
brought up-
talking about next, people, because that is a huge deal.
It's a big deal, absolutely.
I had 2 cancellations, one of them due to job loss because of the coronavirus, supposedly. I don't know, I think they just got cold feet and nervous, and I think they were lying to us, to be honest with you. But immediately my seller, like, thank goodness, he's already back under contract again.
Mm-hmm.
But immediately my seller's like, well, what about Zillow or Open Door? And I'm like, they're not even buying houses right now. Like,
Right.
they're not even an
No,
option.
they have completely put everything on hold.
And a huge chunk of that, I think people hear that and they think, oh my God, the sky is falling. A big piece of that is that those companies get a lot of their money from Wall Street, and Wall Street's not doing well right
Yes,
now.
it's a
So I think
liquidity
making
crisis.
that, making that
See the
connection
things
is
you guys
important.
get to watch?
Yes.
Okay, I'm getting waved at by Chet back there, so time to get going again, girls.
Tara Krieg.
Krieg. No Bianco. We want to welcome you back. I'm Rebecca Rains, and you are listening to Grateful Heart Radio, motivational Arizona real estate and business show on Independent Talk, KFNX 1100 AM. We are live here every Monday at 11 a.m. If you have any questions, please call us at 602-277-5369. Or even if you have an idea for the show, but I am going to tell you right now, we're probably going to be talking about nothing other than the market for the short, immediate future. Again, in the show with me today is Tara Krieg. No, Craig. Krieg, the TK team over at AmeriFirst Financial. And we have Amanda Sue Briggs at Lawyer's Title. I want to make sure I don't screw this up since I screwed up Tara's name. And we are talking some really important stuff regarding real estate, home sales. I haven't even let Tara talk yet about anything with the mortgage stuff. On break, we started talking about all those iBuyers. And for those of you guys that are listening going, what the heck is an iBuyer? Amanda Sue, will you please do me the honor?
Absolutely. So iBuyers, also called cash offer companies, are large real estate brokerages that rather than listing your home for sale in the market traditionally, will actually purchase your home for you and then, or from you, and then resell it on the open market. So we're talking about companies like Open Door, OfferPad, and the newest entrance, which is Zillow Offers.
Otherwise known as the zoo. I'm not saying I call them that, I'm just saying I've heard other people call them that. And what we're talking about is they had been what we call in real estate the disruptors in the last couple of years, right? Which we mean by that is just a new opportunity for sellers who maybe are in distress, willing to leave some money on the table, want the convenience, didn't want to have showings. Along came their knights in shining armor who maybe didn't pay full price, but they alleviated a lot of the other concerns when it came to listing and selling their homes. In the last month, we have heard not only are they no longer purchasing properties, any of those entities, but they've actually canceled deals in escrow, which have left some of these people in distress, which we are speculating, at least on break, that that's probably what is attributed to the amount of new listings going on the market besides the VRBOs. Wouldn't you agree, ladies?
Completely agree.
What are you guys hearing?
Their main price point, all of them across the board, is pretty much under 300,000, and that's where we've seen the biggest increase in new listings, like we were talking about. So it makes sense that that's a big part of where those new listings are coming from. You know, a lot of the reasons that people went with these companies, in addition to what you said, Rebecca, about being in distress, a lot of it too was, you know, they just didn't want to deal with showings for whatever reason. They had multiple pets, they had elderly mother or father living with them that they didn't want to be disturbed, all sorts of reasons that they went with that. So in a situation like this with COVID-19, it'd be even more of an incentive, I think, to not have to deal with showings and have people in your home with the risk, and yet they pulled out completely.
I want to talk about that. Honestly, I'm out looking at properties, and there are definitely things we're doing different today than what we were doing even a month ago. You're seeing hand sanitizer at the front door with notes on the front door to please refrain from touching door lights, light switches, door handles, leaving the doors unlocked, leaving the house the way you found it, really minimizing the amount of exposure within the house, especially with an occupied property. I've seen it where some agents are not allowing showings during the week. They're only allowing virtual showings. So we're trying to do more of the Matterport 3D type tours or video tours. And only then, if a buyer has seen it and still has interest, are we allowing them to come through the home. So we're trying to minimize the amount of exposure our sellers are having, as well as, you know, limiting the amount that the buyers are experiencing too with the virtual tours.
Well, and I think that really speaks to the importance of technology, you know, and really leveraging those virtual tours, the Matador kind of dollhouse
Matador?
Yes.
Matterport.
Dollhouse type images
Sure.
and things of that nature, so that really only a buyer who's truly narrowed down their search are going in those homes.
Yeah.
I actually have a property that we had as a coming soon in Scottsdale near Papago Park. Papago Park. I don't know why none of us can talk today. You know, maybe just we're out of practice. I don't know. And we had a coming soon sign, which, just so you guys know, the coming soons are no longer going to be allowed by Armless, which is Arizona Regional Multiple Listing Service. We'll actually get fined if you have a coming soon sign on any property, starting, I think it's April 5th or 6th, that's somewhere in the next week or so, right?
Yeah.
And because it's occupied, we had it a blimp. We had it as delayed in the MLS, and then it went active for like an afternoon. This was 2 weeks ago, and all of a sudden I started getting all these requests. I'm like, what in the world? This isn't supposed to be on the market yet. So we put it back off market, and ever since then I've had several people harassing us trying to get into this home. So we did decide for tonight, one night only, pre-MLS, we're going to allow a few people into the home. And if somebody buys it, we're just going to let them buy it, because I don't want to have to expose my seller to any more showings if we can avoid it. Right. I mean, if he gets the offer that he needs and that he wants, he's good with that. So I think most agents are trying to be as cognizant of that as possible and safeguard our clients. But at the same time, real estate is still happening, and we still have to have it happen. Tara, I know you mentioned over the weekend you had a few contracts come in. What are you seeing? Are you still seeing full price offers? What kind of, it sounds like there's still...
Yeah, I was going to say the house that my clients made an offer on had just come to market, and fortunately it got accepted, but I'm still calling listing agents because we're still competing in multiple offer situations. I have a client right now who's shopping at a $400,000 price point. He's got excellent credit, he's well qualified, and he has been beat out multiple times. And the agent sent me a text this morning. He just made another offer on a home, and she said, I'm shocked. I really thought that this would create the slowdown that we needed. And so I think it's important for buyers to understand that there's certainly still competition.
Agreed, 100%. For those of you guys watching live on Grateful Heart on our Facebook live feed, I'm going to show you guys a chart. The chart is being shown right now. And what this chart shows, it's a virtual chart. No, actually it's not. It just shows that we have very little inventory, and we're still way less than where we should have been even a year ago. A year ago, we had, let me take a peek, I have to put my glasses on for this. A year ago, we had 23,000 active listings. According to the Cromford report this morning in MLS, we have 17,000 listings active. When I narrowed it down just to Maricopa County, it's far less than that. And that's why it's still a seller's market, as long as, you said it earlier, Tara, as long as their jobs are still secure.
Yeah, you know, 3.3 million job losses is certainly not something to not make note of or take notice, if you will. And so I think it's important to remember that a lot of those are temporary when the economy opens back up, a lot of those jobs are still available and waiting for those families. But one of the things, Rebecca, that I think is going to be really interesting to see is what new listings come to the market because they want an emergency reserve. You know, I teach Dave Ramsey, I do these 9-week financial courses. It's ironic, I actually was in week 8 of a 9-week course, and we were on our last week as this all began. And I thought, what a blessing for those families who had been preparing and didn't even know it by saving up an emergency fund and paying down debt and really preparing. And so I would not be surprised if we see homes coming to the market because families are concerned that they don't have an emergency reserve and they want to sell to tap into the equity in their home.
Okay, so point taken. One of the homes I showed over the weekend, that particular seller was looking at living in his RV for the next 3 years.
Wow.
And he's selling everything.
Yeah.
You know, again, I
Getting
think
liquid.
getting liquid.
Yeah.
And isn't liquidity the biggest concern on the stock market right now? I'm looking across the table at Amanda Sue, so she can talk about that. You did bring up the stock market, and I know Chet's going to start getting really excited over here momentarily and start waving at me that we're going to have to go to break. So before we do go to break, a little blurb about what the market's doing, because that is actually what you talked about on break, why we're seeing these big eye buyers not purchase right now.
Absolutely. So the stock market, like everything else in our world right now, is very fluid, going up, going down on a daily basis. And the place where most of these iBuyers like Zillow and OfferPad and Open Door get their funding from to purchase all of these homes before they resell them, because obviously you need a lot of cash to do that, is from Wall Street, is from the stock market. And so I think that's a big reason why we're seeing them pull out. The only other segment of the market that the stock market tends to impact is our luxury market. So that's the other piece that we're seeing a little bit more cancellations of properties that were already under contract on the luxury side, because a lot of their wealth comes from stocks rather than from mortgages or cash reserves.
One of our buyers for one of our new builds that you're familiar with Belago Homes, they had claimed that in the last month they've lost $350,000 in their investments through the stock market. And so they were short actually to close escrow because they had planned, we sold the house for them. They were planning to take $50,000 as their down payment from their stock monies. And they said that today that stock money is only worth $14,000.
Wow.
Yeah, I mean, I don't know. Again, things might have changed in the last week, but I don't follow the stocks nearly as closely as I should. Tara's shaking her head no and yes. And
yes, I'm shaking my head because we actually have a woman right now where when we're looking at income, we're looking at the balance in these asset accounts to determine a continuance. And we actually had a woman who, her statement initially had shown that there was sufficient funds in there to support the income for a 3-year period of time. And by the time we had to update the statement, there wasn't, and we had to reduce that income. So I think the stock market plays a huge role in a lot of family scenarios.
Okay, so when we come back from break, because we have to go play some more commercials, you guys hopefully are finding this episode entertaining and educating and important to hear more. When you guys come back, we are going to talk more about the stocks. We're going to talk more about the bailout money, Tara, because I know you're just dying to talk to us about that.
I think we want to talk stimulus, and I really want to talk about what are the changes that are happening in the lending industry so that we can continue to do real estate in these changing times.
Okay, we'll be back, guys, after break. Join us in just a few. Thank you. Yeah, he's doing this.
Yeah. So I think part of that, Rebecca, is appraisals. What is Fannie and Freddie doing to allow for drive-by appraisals, appraisal waivers? When do they apply? How are we handling borrowers that are on furlough? You know, so they're not
that's
terminated,
huge.
but what does Fannie and Freddie say about that if they don't have a current pay stub that supports their earnings?
Right.
How are we handling
FHA and VA, we got to talk about.
We got to talk about that. We've got to talk about non-QM, so bank statement loans, jumbo.
Pretty much
I mean,
off the
there's
table,
so
right?
many things to really, I think, speak to about.
We're going to run out of time.
Yeah.
We're going to run out of
I
time.
kind of knew that.
We
too.
are
I was
pre-recording
like,
a second show. I haven't decided if we're playing it next week for those of you guys that are watching right now, or if we're going to play it down the road. It's just, there's so much to talk about. And now, Amanda, I did get an email from Anthony over at Lawyers on Friday. Hey, Anthony, in case you're listening. And he mentioned that there was, and I don't want to misquote it, but it sounded like a pretty high amount of cancellations happening over at Lawyers Title.
Yeah, so I mean, definitely, I don't, I hesitate to talk about the cancellations because I think a lot of it is, I qualified for this loan before and now this loan, I can't qualify for the same thing. So it's not, I'm not going to buy a home anymore. It's, I've got to take a step back and figure out what I'm doing.
Restructure.
Exactly.
Yeah,
and so, yeah, we have seen a high cancellation rate, some buyers just getting cold feet, and that sort of thing too. The biggest thing that, whether you want to say it as you're talking about your stuff or I can say it, is realtors and buyers who are buying need to plan on longer closing times, because we're moving half of our escrow officers to working from home, and
Yes,
most
we
title
need to talk
companies are
about that.
doing that to abide by
Do
stuff.
we have to talk
Yeah.
about
we're
that?
back to we're back to 45, 60-day
So
closing.
I just
had
wrote
a
30
three-
days though over the weekend, so don't freak me
I'm
out.
telling my agents no. And
No.
and here's
45
why.
days or more.
And here's why, because we don't want to set ourselves up for
Yes.
false expectations, and it doesn't
Okay.
mean we won't still try
Time
to
out. I
achieve.
totally forgot to print up the new COVID addendum. Did
Oh,
you have
we
it?
talked about that. Yeah.
You please pull that up and read off the first part of it, because now we have, and I meant to print it for this morning. Now we have a new addendum that literally I just saw for the first time on one of my listings on Friday night, and I used it for the first time yesterday myself on one of my buyer clients. And it's an addendum to basically protect everybody. The fact that we may not make escrow on time and or have to cancel. I actually had a earnest money cancellation dispute on Thursday. A committee, not lawyer's title. This is why I only like using lawyer's title. This is definitely a plug for lawyer's title. The buyer insisted on using another title company, and I personally think that it wouldn't have gone this way. It was non-refundable earnest money. What definition in this world means anything other than non-refundable when it's written non-refundable?
Right.
They gave $10,000 back to the buyer. My seller was furious, and he thought that he was given bad advice from me and the escrow officer, who said she's
Right.
never seen non-refundable go back.
Right.
And I think it's today's climate, because apparently,
COVID, yeah.
normally the committee only reviews 1 or 2 cancellations at a time. This one, they had about a dozen.
I bet.
Mm-hmm.
And so they're just erring on the side of caution. And because they fought it saying they lost their job, even though that was not a stipulation, they claimed that because of that, they were giving it back.
And I can tell you, hands down,
I was
that's
not
kind of-
happy.
But that's the temperature of the marketplace,
It
is
is.
accommodation, and consideration, and recognizing that there are things outside of borrowers' control, and not just borrowers, but sellers and buyers. And so I think people are being more accommodating. That's
They're being
kind of-
more accommodating, and they're erring on the side of caution.
Yes,
But my seller, thank goodness we got his place resold over the weekend.
thank goodness.
But when we were disputing, we didn't know if we were
Right.
going to get it sold.
Right.
And he was freaking out because he was under
Sure.
contract, non-refundable himself with the builder.
Yeah.
And he's like, here, I waited all this time. They've tied up my house. Now I'm not only going to not get my house, I'm going to lose all this money. And now you're telling me I'm not even going to be compensated for everything that I've been
Right.
harmed?
Right.
So thank you, baby Jesus. I thank God. Like, I can't even tell you how many times over the weekend that Friday night we got a full price offer,
Yeah.
and it's closing at the same time period. So it's basically been replaced.
So how about all those buyers where they said if you have an FHA loan and you're under 640, effective immediately, we're
You're done.
terminating all.
Yeah.
It doesn't matter if it's locked. It doesn't matter if docs are out. If it is not
This
funded.
is why you guys should be watching live. This
Yes.
is like all the good stuff happens
Down
on break.
payment assistance loans are changing every
Yep.
day. The availability of those programs is fluid daily. So literally we get a rate sheet and today it's available, tomorrow it's not. So, it really requires that partnership between the lender, the agent, and the buyer.
Okay, so commercial's almost over. I think we have to hit first, as much as I don't like it.
Yes.
You telling us no for 30-day escrows. And I'll let Amanda Sue talk about the COVID addendums.
And
Okay.
why that's important to set that expectation up front.
Right, and then you can talk about all the changes in the loan stuff, and I think
Yeah.
we'll be back on commercial again once that
We
happens.
will be, yeah.
Okay.
I have some really great verbiage and agent use this weekend. also,
Okay.
too.
I want to welcome you back. I'm Rebecca Rains, and you are listening to Grateful Heart Radio, motivational Arizona real estate and business show on Independent Talk, KFNX 1100 AM. In case you're just joining us, we have Tara Krieg from AmeriFirst Financial, the TK team, and Amanda Sue Briggs with Lawyer's Title and Roosted. Amanda, I told you could talk about Roosted earlier, and we never got to it. We're going to run out of time to talk about mainly everything we want to talk about. So if you guys are only listening to us on the radio, you are missing out, because on break we are talking about all kinds of good stuff on our Facebook Live channel, and that is at Grateful Heart TV. Check us out. And in the meantime, Amanda, Roosted, tell us about that real quick, and then Tara, the floor is yours.
Absolutely. So Roosted is a real estate referral brokerage. So it is a place for people who have their real estate license but don't actually want to be showing properties and negotiating contracts, where they can kind of just park their license and earn a referral fee whenever they know someone looking to buy or sell.
So right now might be a great time for all of those agents who are not very busy right now, who want to just park their license. Look up Roosted. Is it just roosted.com?
Roosted.io.
I-O. Okay, Tara, she's telling me how she's going to tell me no if I write a contract and I want it done in 30 days. I'm not happy about it, people. Not happy at all. But tell me why, Tara. Let's explain it to our
I
audience.
just think it's really important for all of us in the industry to recognize that these are trying times for a lot of families. Most people have transitioned to a work from home environment. Children are not in school or daycare. It was actually announced this morning that school will not be resuming this year, which I can tell you as a mother of a small child in 5th grade, what immediately comes to mind is entertaining him. What are we going to do? And so we're trying to set expectations with all of our referral partners and our clients that we need to remember that this is not a normal market. And the idea of a 30-day close, although, certainly there's a possibility if they're putting enough money down, there's an appraisal waiver, everything goes right. But we don't want to rely on that. And so we're really communicating, hey, let's set the expectation for a 45-day close of escrow. And if we can close before that, we are happy to accommodate. But let's be realistic. We have escrow officers working from home. We have a limited amount of notaries that are going to people's houses. And we're not signing in a lot of the title companies.
Time out though. Maricopa County does allow us to still record, because I have heard across the country that that is not the case everywhere.
Well, we are fortunate. I'm in a coaching program, and a lot of my peers around the country are not able to function the way that we are here in Arizona. And real estate in a lot of ways has come to a complete halt. And so we're very blessed to be in Arizona right now, which is not one of the hardest hit areas. And I think that we're all being innovative in continuing to serve the industry and each other.
Okay, so all of that said, Amanda, didn't you say that we weren't going to talk about necessarily the cancellation rate that we've experienced? However, speak to what is Lawyers Title doing to accommodate social distancing? What are you guys doing there to keep everybody safe but yet still do business?
Absolutely. So any non-essential staff that don't need to be there to get files closed are functioning from home now. We have a lot of our offices limited to less than 10 people, so even those escrow officers that do need to be in the office are able to close the files. We're restricting anybody from actually coming into the office to sign as much as possible, using well-vetted notaries to make sure that they're taking precautions when they do go out to people's homes or meet them somewhere to sign. And in general, just trying to make sure that we're following all of the protocols that the government's given to keep everybody safe while still being able to close, still being able to keep things functioning and close our files. Yeah. The biggest thing we're seeing along with that, we need longer closing times, because right before all of this happened, refi boom came. And so our escrow officers not only have
Terry, you'll have to talk about that.
Oh boy.
all the closings from the hot market, but all of the closings from these refis that are still happening as well. So they're just trying to keep their heads above water right now.
So Tara, and awesome information. And basically, all of us are working from home as much as possible. Our dogs are loving us because we're spending a lot more time with our pets, right? And the kids may or not be loving us. I think my daughter, who's 16, was very happy to find out she wasn't going to have to go back to school. And she's also lucky, at least as of right now, she's graduating next year. And so she's part of the class that hopefully will get to walk. Sad for the students this year who don't get prom, that don't get to walk, that don't get to do a lot of those things. So I want to say my condolences to you kids that worked so hard, that don't get to have that recognition that you so deserve.
Absolutely.
All of that said, Tara, right before St. Patty's Day, because you mentioned it, and I definitely felt like everything changed over St. Patty's Day weekend. We were still out, that things were still happening, right? At least here locally. We had rates that had dropped to unseen rates. You guys were busy bouncing off the walls doing refis.
Yeah, we started out with 30-day close of escrows, quickly went to 45 days, at one point hit 75 days, currently at 60 days, meaning if you call for a refinance, you can't even lock in for any period shorter than 60 days. We're setting very realistic expectations on our refinances, and primarily because we do want to continue to prioritize the purchase business. These families need to make a move, and we want to make sure they can do it in a reasonable and timely manner. But with that push for refinances, it's so crazy, Rebecca. What normally moves the market is not moving the market today. So
okay, so explain that.
I'm going to. So normally, long-term fixed interest rates are directly tied to the movement of mortgage-backed security bonds. And with this stimulus package, which by the way is the largest stimulus package in American history, the feds came in and said, we recognize the importance of keeping long-term interest rates low, and we're going to come in and we're going to purchase mortgage-backed security bonds to do that. And they have come through big time. But what's crazy about that is there is actually a lack of supply and demand, if you will, for servicers who want to purchase those refinances and service them, and I'll tell you why.
Okay, yeah, because is that tied to the stock market?
No.
What is it tied to?
I'm going to tell you. So as a servicer, this is Bank of America, Wells Fargo, Chase, the person who collects your payment every single month. If you do not make your payment, they are still required to pay the interest to the end investor. So I'm going to try to keep this really simple.
Oh my goodness.
I
We did
know.
talk about this on the phone
We
and
did, but it's a really big deal. And so here's the deal, you guys. I want you to think about it like this. You and I, we have 401ks. In our 401ks, if we have a balanced portfolio,
so speak for yourself, I'm self-employed.
or IRAs or all of those things. So in our retirement vehicles, if you will, it's likely that we have some mortgage-backed security bonds because they're considered a safe and secure investment. Our baby boomers, whose financial advisors said, hey, let's move your money out of the stock market, are oftentimes moving that money into the bond market. The bond market are just mortgages.
Right.
They're just, bundles of mortgages. Well, guess what? The servicer, Chase, Wells Fargo, Bank of America, still has to pay the interest to you and I in our 401ks. Just because the borrower doesn't make the payment.
And you're making a big deal of this because of what was just announced last week.
Yes.
A lot of people out there, not just people who own homes, but renters, all think maybe we got a free ride for 90 days.
Oh, absolutely. I mean, it's not a think. We seriously believe that 25% or more of families with this forbearance opportunity will attest to the fact that they've been financially harmed, and likely they have, and that they will not make their mortgage payment.
But some people that haven't may just be looking to take an opportunity not to make those payments, possibly.
Right.
And that's why the mortgage-backed securities or the servicers don't want to take on any more new
Take
loans.
on these new loans because they're taking on a financial obligation. So here's the deal, you guys. The feds are dealing with it. They made promises to come to the rescue of all of these various industries that have been affected, but I can assure you that these were unintended consequences. When the feds stepped up and said, here's all the things we're going to do to help.
Like mom and dad trying to help out the kids, right?
Yes. These were the unintended consequences. So while our industry was thriving, refinances like crazy, product offerings like crazy, everything came to a screeching halt. And it's definitely going to take a little bit of time in order to see the liquidity come back to the marketplace as a result of that.
Okay, but it did not come to a screeching halt because real estate is still happening and your rates are still low. So I know we have to go to break here momentarily. Tara, quick question.
Yes.
If somebody's coming in, because we already ran out of time, I wanted to talk about this. If somebody's coming in with an FHA or VA buyer, a week ago I was hearing those are the loans that we didn't have to worry about.
Yeah, it's true. And the reality is those are the loans that service our low credit score borrowers. Those borrowers who have credit scores.
In other words, higher risk, they won't even make their first mortgage payment.
You're absolutely right. And there is no appetite for those loans. So effective immediately, the majority of those low FICO loans are being eliminated from the marketplace. So you had buyers that were under contract, maybe within a week of closing on their home, and got a call from their lender and said, we apologize, your loan program is no longer available to you.
Ouch. Okay. All right, we have to go to break, you guys, and pay some more, pay some more bills, run some more commercials. But we need to elaborate on that because I don't like going on break on any kind of scary or bad negative note. This is supposed to be motivational, Tara.
Well, and the motivation is going to come from the fact that we work with families to create solutions to these problems, and that's why you need to work with somebody who can help you out.
Okay, so you guys are listening to Grateful Heart Radio, Motivational Arizona Real Estate and Business Show. We'll be right back after break, guys. Wrapping this up.
Oh,
my
so you
goodness.
need a lender who can help you get your credit score up.
What can we do? Is it based just on credit score?
Yeah, they said immediately anybody with a credit score under 640, these product offerings are no longer available.
That's really scary.
It's very scary. And it isn't just a credit score issue. It's FHA as a whole in terms of they've removed the SRP on the back end. So I write a loan and I need somebody to buy it, right?
Okay.
They don't want it. So they're not offering these service release premiums. So the rates on those loans went through the roof overnight.
Through the roof, when we say through the roof, what's through the roof?
Relatively speaking, at a time when mortgage bonds are reflecting that rates should be getting better, they're not. And for the first time in a long time, borrowers can expect to pay points. Because they're not offering.
Okay, so that's a good point to bring up
Yes,
too. So
closing costs are higher.
let's pretend, what's an FHA VA loan rate going right now today, as of the
Let's
moment?
say 3.5.
So it's 3.5 today. It's not as low as maybe it was last week, or maybe it was 3.
3% or 3.25%, but it's not 5 or 6% either.
Yeah. So when we say through the roof, we're talking 3.5, but it might cost you a point.
It's going to cost you some money.
It's going to cost you.
And with buyers who have a limited amount of liquidity, it can be challenging.
So if we were doing, and let's talk about this, DPAs, have they gone away entirely?
You know what, Rebecca? Every single day is a new day.
Okay.
And so we get a daily rate sheet. There's about 15 or 20 products on it. And that day it will
Down payment assistance, you guys,
down
if you're
payment
watching.
assistance. It will tell us if that product offering is available or not. So quick story, because we probably won't have time on the air. I had a borrower who was making an offer, and that day on the rate sheet it said his program was not available. And I explained to the agent, I said, that doesn't mean it won't be available tomorrow. It just means it's not available today.
And then do you have to lock it in at that moment?
Okay, I have to have an accepted purchase contract.
Okay.
Everybody was agreeable to give it a go. So they wrote the offer, they got the contract accepted. I had it by Monday morning. I was able to actually log in and lock him, reserve his funds on Monday morning at a lower rate than it had been the week prior. So it's just completely all over the place.
So basically there's no guarantee in anything. But if you've been a buyer that's gotten beaten out, there is a lot of new opportunity.
There is opportunity, absolutely.
But for the people that have credit challenges, they need to do we'll talk about that on here because I think that is important.
It's very important.
I had the gal from Don McCraw with Go Clean Credit on about maybe a month and a half ago, and there was so much great information she shared about credit repair that I'll probably repost that show again in the near future because it's even more important than ever.
More important than ever, yeah. I had a guy literally right now.
He's waving at me.
I'll talk about it. We can bring it up.
And then, do we want to talk about cancellations, or what do you want to do to wrap up the show on your end?
I mean, I think we can mention the fact that realtors are prepared for this. You mentioned all the ways that you're changing the way you show properties and list properties, and we have an actual official
the COVID addendum, we forgot that last time. Oh. I knew we were going to run out of time today.
And I think I'll just read like a sentence or two from it and just say, like, it protects both buyers and sellers, that if something out of their control happens, it gives us a mechanism to be able to resolve that.
Okay, so I'm going to go to you first, and then we'll come back over to you. We want to welcome you back. I'm Rebecca Rains, and you are listening to Grateful Heart Radio, motivational Arizona real estate and business show on Independent Talk, KFNX 1100 AM. Guys, I'm here with Amanda Sue Briggs with Lawyers Title and Roosted, CEO of Roosted. She talked about that in the last segment. Then we have Tara Krieg from the TK team over at AmeriFirst Financial. And I'm really laughing because I said it wrong apparently on the last show and probably the show before that. It's not Craig, it's Krieg. And so on break, you guys are really missing out on our breaks. We talk about so much good stuff. And I forgot on the last segment, we ran out of time. I had asked Amanda Sue, who knows all about our contracts and paperwork, and then what is something that you're seeing today that just came into an existence to protect people?
Absolutely. We actually have an official attorney-reviewed addendum for COVID-19. And so I'm not going to read the whole thing, but, you know, it kind of starts out saying the current worldwide pandemic has impacted real estate transactions in many unique ways, including travel restrictions, self-imposed and government required quarantines, and closures of both governmental and private offices required to fund, close, and record. And so what this addendum does is essentially provides the mechanism to protect both buyer and seller. If, for example, something that hasn't happened, which is the closing of the recorder's office, hasn't happened, we don't see it happening, but if something like that were to happen, it provides the mechanism for both buyer and seller to either finalize that transaction or without any recourse, exactly, extend that to when it's open again.
And so this isn't an addendum that Lawyers Title came up. This is an addendum that Arizona Association of Realtors put out last week. I used it myself over the weekend on an offer I submitted. I received it on one of my listings. So it is an active use, and that is because within the last couple weeks, we're seeing some really crazy things happening out there that are unprecedented. We've never seen before, and those of us with experience in this market are doing everything we can to navigate and protect our clients. Absolutely, 100%. I think more so than ever, it's important to go with guided professionals that are experienced. You know, I am old. My husband reminds me all the time how old I am. I've been doing real estate for this May, 27 years. So I did work through 9/11. I did work through the last downturn quite successfully, getting really good at doing short sales and foreclosures. I do not expect that we're going to see those anytime soon.
No.
I do not either.
No, there's too much equity in homes. The demand has still been pent up, and we still don't. I mean, honestly, ladies, it's an even supply and demand right now would mean we would have 3 times as many houses as we do on the market.
Exactly.
So there's still a shortage. It's still a seller's market. It's just the poor folks out there that are currently underemployed or not employed that we have to really worry about. We have to give good counsel to. So in the remainder of our show, Tara, I'd like for you to talk about some of those things.
Yeah.
Because you only have a few minutes.
I know, I know. So let me start out by verifications of employment. You know, this came up. If I'm on leave, if I'm at home temporarily, can I still get a loan? How are you going to fund my loan? And so we waited, and Fannie Mae and Freddie Mac did come out with some guidelines that allow for more flexibility and alternatives in verifying employment for customers whose workplaces are temporarily closed. This was really important because if somebody's been with their current employer for 8 years and it's likely they're going to resume their position and their pay structure is not changing, you know, it would be a shame for them not to be able to continue with their home purchase. And so I'm thrilled to see that the agencies are coming out and really providing guidance to us lenders to say, this is how we want you to handle that. In addition to that, we just received word last week that the IRS is going to stop fulfilling requests for tax transcripts. So not only do we have a situation where
That's kind of scary, honestly.
It is. So we're going to talk a little bit about that. Not only do we have a situation where the 2019 tax deadline was extended till July, we have borrowers who are using the income from last year to qualify for their home purchase. And if the IRS has not processed their taxes as a result of these delays, it could mean that that borrower doesn't qualify. And so our VP went to our investors and said, how are you going to be handling that? And as long as we can prove that they were in fact filed, it sounds like we're going to have some flexibility around waiving the requirement for the transcript. So perhaps that means they mailed a check to the IRS and the IRS canceled the check. There was some refund owed or something along those lines. A letter from a CPA attesting to the fact that yes, these were filed, confirmation from TurboTax, you know, if they self-filed. So again, it's all about really trying to think outside the box and come up with solutions to help these families.
So real quick, let's go, I want to rewind a little bit. Right before we went on break, we were talking about how some borrowers might be credit challenged in the sense that maybe they don't have a 680 or 720 FICO score.
Right.
And those are the ones that thought they had a loan that it had just gone away.
Yeah.
And those are also the higher risk folks that the people don't want to buy the mortgages on the back end
For
in the
fear
secondary.
of default, absolutely.
For fear of default. Explain a little bit better about the folks that currently have a mortgage, that are currently underemployed, that don't have, unfortunately, the safeguard of a savings account.
Right.
They didn't take your Dave Ramsey class, Tara.
Or my advice.
Or your advice, which, you know, that happens all the time. So what can they do, and how will that impact them if they don't make their mortgage payment?
I'm so glad you brought that up. So this time I'm thrilled to say that they thought through this stimulus better, I think, than last time. I think the biggest mistake that we saw in the crisis of 2008 was that we were slow to market. Everything that we rolled out was kind
Right.
of, I would say, reactive as opposed to proactive. And I'm just thrilled to see that they've learned from their mistakes. And so not only did they include verbiage in this forbearance of it will not report adversely to your credit report, when they're calling their
As long as
servicers-
they're current first.
Yes, and I want to talk about that. And this is why this
You're
is
running
so-
out of time.
All right, get into it. So you guys do not quit making your mortgage payment until you have approval from your servicer to do it. They're not requiring, from what I'm hearing through the grapevine, all this documentation to evidence the hardship, but you do need to call the servicer, apply and attest to the hardship before the forbearance is approved, and you'll be expected to make that payment up until that point.
Okay, so that's great advice because, you know, same thing with tenants, and I wish we knew more. I think we talked a little bit before the show started about the new eviction rules, because I think those, from what I'm hearing, are the folks, you know, that are waitresses, bartenders, travel-related industries that are definitely without employment right now that may not be able to make their rent payment April 1st, which guess what, guys, is in 2 days, right? So the landlords can't just automatically kick them out for non-payment right now, but how will that negatively impact them? Is there anything that either of you guys can share to that?
I'm going to let you, do you know a little bit more about that?
There are some areas where they've passed legislation that evictions cannot occur until further notice. We haven't seen that, to the best of my knowledge, in Arizona yet. So it'll just be interesting to see. I think it's something, if you're a landlord, that you need to be in communication with your real estate agent and other advisors that you trust, and keep an eye on the news and see what's going on. I know for myself personally, we proactively reached out to our tenants just to get a feel for where they were at.
Right.
And thankfully none of ours have been impacted by this, but at least we've opened those lines of communication. So regardless of what the government says, we kind of know what's going on and can adjust accordingly.
Go ahead.
I was going to say, I actually saw a post on Facebook, which I was thrilled to see, that I think it was Chase Bank had called and waived payments for 6 months proactively on somebody's commercial loan, who then did the pay it forward and called his tenants, and those that were in need deferred their rent payment. So it was just wonderful to see that everybody's really coming together and trying to help each other out.
Yeah, those are great stories to hear.
No, those are amazing stories to hear. And all of that said, I hate to say this, ladies, we're wrapping up our show. I know we could talk for probably 5 more hours on all of this. And that said, Tara Krieg,
Yes.
how can people get a hold of you if they need to get a hold of you to find out more about their particular situation?
Yeah, please do reach out. You can reach our office at 480-344-1951. We do still have somebody working that line and then scheduling for a follow-up phone call. And then you can also visit our website at www.tkteam.us and submit your application if you're interested in evaluating your options. There was one thing I'm going to say quickly, Rebecca, and that is, if you are interested in a refinance, do not discontinue making your mortgage payments. Please give us a call.
Okay, so we're already being told we got to wrap it up real quick. Amanda Sue Briggs, thank you so much for your time today. I thank anybody who's been listening to Grateful Heart Radio on Independent Talk 1100 KFNX. I'm your host, Rebecca Rains. And if you guys are thinking about getting into a house, check me out at integrityallstars.com. I don't usually plug my real estate side of the business, but today, more so than ever, there's definitely a lot of opportunities out there.
Yeah.
We just, you got to have the right guidance, folks. So have a wonderful week. Hopefully you guys will check us back out next Monday, 11 a.m., same place, same time. Grateful Heart Radio. Thank you.
Oh.